Good morning, everyone, and thanks for joining today on this funding webinar. The plan for the next half hour or so is to highlight how FFT can support our client base when it comes to finance and to cover some of the more common types of funding that's out there, including when they may be needed and what might be required to obtain them. At FFT, we've been working with a funding platform called Capitalise for several years. Capitalise is primarily a platform who work with a large number of lenders and have an experienced team full of experts in all things funding. Salome, our partnership manager there, is going to do the bulk of the heavy lifting in this webinar, and I'll introduce Salome in a moment. The idea of all of this, it's not to push our clients to obtain finance and load themselves with debt for no obvious reason. Rather, it's something we can put in place to offer support where finance might be required, but also, and actually more commonly, to allow for our clients to have conversations with experienced specialists in this area when they might wish to do so. We actually quite regularly set up exploratory calls between our clients and a funding specialist at Capitalise to either help support them in obtaining finance where a requirement has been identified, or quite often just to give them insight into what options might be available for them should they need it, the costs, the timescales involved, and how to ensure they are best placed to obtain the finance. This has proved very beneficial to a lot of our clients, and it's something we really value. These conversations can cover a wide range of topics, including short-term cash flow or working capital finance, asset finance, property finance, long-term loans, for the purposes of business expansion, and a whole host of other things. I'm going to hand over to Salome now, who's really the expert in this. She'll take you through the main presentation and cover this in a lot more detail. She's a regular presenter for Capitalise, so no pressure, Salome. We are expecting a decent performance. Just to note, there'll be a short Q&A at the end, so don't hesitate to send any questions during the presentation, and we'll cover any good ones at the end. I'm going to hand over to Salome.
Yeah, hi, welcome to today's session. So yeah, as Sam mentioned, we're just going to cover basically how we work with FFT and also just the products available and just setting yourself up for success if you are looking to access funding. Go on to the next slide. Sam, did you want to cover this or? Okay, no worries. Okay, so about Capitalise. So we have existed since 2016, and we were created initially as a platform that just covered funding for small and medium enterprises, as they're a market that is overlooked within the lending space. So we have over 100 lenders, and our employees are across the UK and South Africa. And then we also have made offers of 1.7 billion to small and medium enterprises. So why do we exist? So the main core belief that we have is that every business deserves an equal chance at success. So this is why we really operate in that space of small and medium enterprises, because we understand that the work that you are doing within your business is super important. So why are there barriers in place to prevent you from accessing finance, maybe due to being a smaller business or operating a shorter period of time? We want to make sure that that is an option that is available for you if it is needed. So if we kind of look at the story of small businesses when it comes to funding, as mentioned earlier, you're on the ground, you're doing the work, or you're heavily involved in the business. What tends to happen is that finance is something that is missed. And when finance is being looked for, it's left with a week. And then the research that goes in is normally about an hour's time spent looking on Google, looking for something available. And then what ends up happening is roughly 80% will apply to one lender, and that is typically the bank. And for small businesses, the banks tend to reject their applications. And then the journey kind of stops there for the business. But we want to make sure that you know your options in advance and you're able to look at a source that can support you properly. So if we look at the dangers of going to market alone as a small business, some things that you really want to be considering are, do you know your personal credit score as well as your business credit score. Most lenders will have a minimum credit hurdle that has to be met in order to even consider your application. And that tends to sit with a credit score between 40 to 60 points. If we're putting that in credit score terms, that's a D to C band credit score. So being aware of that before submitting an application with someone is important, because then you can avoid rejection. If you're unaware of your business credit score, this is something that FFT has access to partnering with us. So just get in touch with your accountant at FFT and they'll be able to support you in finding that out. Is your application submitted correctly with the correct documentation? This one gets people all the time. Lenders are so fussy with how they like their documents presented. So we'll be able to support you with getting those documents in the right format to ensure that that's not a hurdle that also delays you being able to access funds if you need them. Have you selected the right lenders for yourself? So we'll go through the products in a little bit, but you might go looking for a working capital loan, but there might be a product that's better suited for your specific need. So being able to have that conversation with a funding specialist means that we'd be able to then consider which options would be best for yourself. Have you given up after the first decline? As mentioned before, declines do happen, but at Capitalise, we'd also be able to support you in then looking at lenders that are would be more eligible for yourself. And also we can avoid that in the first place by submitting your application and selecting lenders that would be happy to lend to you in your current position. And are brokers adding hidden fees? Brokers will add fees just because they can, and you might not necessarily know what the hidden fees are. So we often have clients who would have gone to a broker, they come to us, and then we're able to spot that that's not a fair rate that they're giving yourself. So it is really important as well in terms of being able to see any fees if you work with us. So why Capitalise? So first of all, we are FCA regulated since 2015. So this means that we are regulated, we're being checked, and part of our ethos anyway is making sure that we are giving the best to small businesses. So we're not going to be adding those extra fees on top. Additionally, with partnering with Capitalise and your accountant, you're 4 times more likely to be able to access funding. Your accountant knows you best. They have knowledge of where you currently sit. Teams with our funding experts and the insights that our platform provides that FFT has access to, we are then able to get you the best solutions. So no hidden broker fees, as mentioned. That's not something that we are interested in slapping on. We exist to support accountants and their clients. So we will always look to get you the best rates possible as a small and medium enterprise. And additionally, we have access to credit data from Experian, and they're one of the top credit bureaus of choice. So 90% of lenders and suppliers will use Experian when they're doing credit searches. So you can go in confidently knowing that you have access to the credit score that they will see. So they're looking at the different types of lenders in the market. We've got traditional lenders. We're looking at your banks. We have independents as well, lenders too. This is more if you're looking for something a bit more niche, or if it's something like property finance, then we've got those on our panel too. And then fintech lenders, which is the section which we serve the most. So these are the lenders that are lending to small and medium enterprises if the banks, for example, aren't maybe considering yourself. And sometimes we will get better rates than the bank as well. So it's definitely worth submitting one application and seeing if there is a better solution for yourself than the bank. So this is just a little slide that shows the different lenders that we have on our panel. So there's 130 plus lenders. So this is just a small selection. And also something to note as well is we have instant offers. So if there was a need and you wanted to get something in a quick turnaround, you can submit an application if you speak to FFT, and then we'd be able to instantly see what is available for yourself. So now we're just going to take a quick look at the different types of finance that we offer. So we have working capital, and this can come in the form of secured or unsecured, retail finance, also known as a merchant cash advance, secured finance, invoice finance, asset finance, and R&D funding. So we'll start by looking at unsecured working capital. So this is the one that most people normally want. I want to get a loan out. I'm not interested in offering some kind of security. So why might you get this out? So it might be to assist with day-to-day cash flow issues. It's not secured against any kind of asset or invoice, and it often has a quick turnaround. It's flexible based on your requirements, and it's not restricted to one specific purpose. So in terms of this being an unsecured option, one thing that I would say is that we are more frequently seeing that lenders are wanting to see some kind of personal guarantee. So even though this can be an option to take a look at, you are likely to experience higher rates as well, because you're not offering some kind of security. So if you are able and willing to offer a PG as well, it just shows that you have faith in yourself that you can pay back that loan. But that's not to say we can't look at unsecured options. We are also seeing, and we'll get onto the funding market update in a bit, but more and more options of unsecured finance, which are of finance that is secured against something, for example, a debenture or your balance sheet. So there are other options if you're not willing to put down something like a home. Now, looking at revenue lend or a merchant cash advance. So this is absolutely great for businesses that run on a seasonal business or anyone that is taking card terminal payments. And how this basically works is you're taking out a loan essentially, but you're only paying it back once sales are made. So if you were running a store, for example, and you had a really busy Christmas season and everyone was making their payments, part of the payment that they make is then paid back towards that loan. If your shop then closes down for a period of time, you don't have to be making those payments back. So it really works well if you see fluctuations in cash flow. It's basically an advance on future revenues. And as mentioned, there's no fixed amount that you have to pay on a monthly basis. And there is no benefits for early repayments, hence why you can kind of spread it over a longer period of time. So property finance as well is something that we can take a look at. And we have secure and structured products. It can take between 8 to 10 weeks to secure funding, but also depending on the complexity of the situation, it can run over a longer period of time. One of the things, again, with property is you want to make sure that you've got your documents ready and in the right place, because otherwise there is a lot of back and forth. And we can look at commercial mortgages, buy-to-let, bridging finance as well, and development finance. Invoice finance is really good for businesses that operate business to business and raise invoice finance, as it can help bridge the gap between invoicing and receiving the payment. So we can have a range of different ways that it's set up, but a lender will typically give up to 95% of the debtor book amount, and we can get this to you in as little as 24 hours. We've got some great alternative products as well for invoice finance too, so definitely reach out if it's something that you would like to hear a little bit more about as well. Asset finance, so any form of equipment that you're interested in getting, vehicles, machinery, niche assets as well. We have one funding specialist who absolutely loves the niche asset space. So if you think it's something that is a little bit strange, bring it our way and we can definitely see if it's something we can support. So rather than buying the asset outright, you're just spreading that cost of the asset over a period of time. And it can be cheaper than unsecured lending. So this is an example, again, of the importance of having a conversation, as you might come in looking for one thing, but asset finance, for example, could be the right fit for you. And personal guarantees can be reduced or avoided as well. On our website, we have a new feature for vehicle finance as well. So if you were interested in looking at what is available to you without submitting an application, jump on the site and have a go at our asset finance calculator. Finally, we have R&D funding. So when a client is looking or was making a HMRC claim, this just helps to bridge that gap to get that funding to you as soon as possible, as it can sometimes take a really long period of time to actually receive that funding. So we're just going to take a look at some of the challenges for small businesses. So some of the most common funding needs are: you're looking to buy out a retiring partner. You need to renew your vehicles or some kind of fleet of assets. Looking to buy a new building. Looking to acquire another business. Refinance loans that you might have, multiple loans. Struggling to pay payroll. Don't have enough cash to pay VAT bill. Or late payments from a debtor are causing cash flow issues. So I've highlighted these in different colours, as some of these things in the green are being proactive. So you're looking in advance into a future destination, which allows for planning, whereas the red ones are something that is super immediate and is an urgent pressing issue. So what are the differences in these two things? So if we're looking at being reactive, this is quite a dangerous position. Well, it's not the end of the world, but we can take a look. But some of the things that you will experience is short-term and expensive cash. So you're most likely to get higher rates. It could show signs of distress, and this is one of the things that lenders don't take favorably, and it can also impact your credit score from doing multiple searches in desperation for looking. Whereas if you're proactive, we have more time to access your options, we can get you the best rates possible for yourselves, and you're more likely to achieve your goal. So here we've just highlighted a couple of things that are red flags for lenders. So if you're loss making or have a lack of trading history, poor personal business credit, so do make sure you're checking that. History of missed payments or defaults. You're better off coming in before the missed payments start to show or defaults happen within business, so being proactive. Unwilling or unable to provide additional security, so that's the personal guarantee, debenture, an equitable charge. It's more common now that lenders will want to see that. An unsuitable purpose, always have your purpose defined. A high level of existing debt, lack of affordability, and have already been to market. As I said, we can take a look, but it just might be a bit more difficult. So on the screen here, this is what a good business looks like to a lender. So you want to have clear bank statements with no missed payments. We also take them in PDF format. When you are submitting an application, lenders will only look at them in this format, or open banking as well. Good personal credit of the directors and the business, well-defined purpose of funds, profitable with at least 2 sets of filed accounts. Typically, we do ask for 1 set of full filed accounts, but just being aware that lenders might be looking for 2. Low levels of existing debt where possible, clear affordability as well, and the willingness and ability to provide security. So now we're just going to take a little bit of a look at the lending space at the moment. But what we are seeing at the moment is, in general, we are starting to see high levels of demand. So we're getting back to that state around pre-COVID. We are also seeing more urgency in terms of funds being needed. So as people are getting more back into trading and they are thriving, small businesses, we need to be sure that you're prepping for seasons ahead, such as we've got Black Friday. That's always a big one that comes up for us. We've got Christmas, seasonal businesses as well, such as Halloween or any kind of events where sales tend to pick up. So we're saying get your applications in sooner rather than later to prep for those periods. Another thing as well is that you can always get an application in, go to market, get an offer, and that offer tends to sit there for 7 to around 30 days. So you could get that offer and then make a decision there. So yeah, we are expecting to see more applications. We are also seeing more lenders are currently coming to market. So we are constantly getting updates over here on our side of new innovative products. For example, alternative invoice finance, debenture-backed products, and also one of our top lenders is lowering the criteria for standard products due to the success that they've seen for small businesses in accessing recovery loan scheme, the growth guarantee scheme. So there's more options that are opening up, and the more that small businesses continue to kind of show that they are great for accessing finance as well, that does mean that the criteria does start to lower. And then in terms of the term loan space, we are also seeing lenders having appetite for 60-month loans, and their internal criteria is widening, meaning that more businesses will be eligible to access finance over longer periods of time. And then also another thing that just pops into my mind is for those businesses that sit in the space that are looking for 500,000 to £1 million, we are seeing more appetite for that as well. And if you have any questions about the things that I've mentioned, just reach out to FFT or reach out to myself as well. So what are the key takeaways? So just make sure that you are planning ahead. If you have a query or you're just interested in seeing your options in the future, just reach out to FFT or reach out to myself and we'll be able to take a look. Know your business credit score. This is something that you can benefit from knowing, even if you aren't looking for funding, if you work with suppliers as well. Just knowing your position means that you have basically the control and the negotiation power as you know what you're eligible for. Have a clear defined purpose for your funds. Always be aware of what your funds are for, as this is something that lenders will question and it could be a reason to decline you if you're unaware. Gather your financial documents. If you're not sure what documents are needed, just reach out as well, and you will always be supported through the process with a funding specialist. They'll keep you informed throughout the whole process. And use a trusted partner to avoid doing too many applications and find the right solution for you. So if you have someone that you trust, go for it. But if you don't, do make sure you're coming to FFT and working with Capitalise, and let's see what we can do to support you there.
Okay, thanks very much for that, Salome. That was great. It really covered a lot of important topics. We have had a couple of questions come in as Salome's been running through that. Quite good ones, actually. So I think the first one I'm going to cover is, do funding searches have a negative impact on credit score? So I think the straight answer is they can do. But there's a few considerations there, really. So initial inquiries, which will maybe come to FFT and then will be discussed with Capitalise, will be considered internally by Capitalise, and then you'll get a little bit of an answer before doing any sort of searches at all, and that will obviously have no impact. There's no hard search going on there. There is an impact when a search is made, but actually the way the platform works is quite helpful because it will do several searches at once to try and get the best solution. And that actually has less of an impact on the credit score than doing lots of individual searches. So that's quite useful to be aware of. And I think the final thing on that is that Capitalise will advise on whether it's worth doing a search at all. So the idea is not to do any searches that aren't necessary and to cause any impact that that shouldn't have been caused. So searches will only be done for a good reason. I suppose that's one very good reason to sort of approach us and reach out to try and get some support from Capitalise, just to sort of protect credit scores as much as can be done. So another good question, I suppose, is so what sort of timescales are involved in getting finance? So obviously this varies based on the type of finance and the circumstances, really. So something like property finance, I think Salome already mentioned, can take quite a number of weeks due to the complexity involved and the various documents and checks that are required. So obviously you need to plan ahead substantially for that one. But actually, quite surprisingly, there are quite a few of the other types of finance, so invoice finance, things like finance for short-term payroll cover, and even term loans. It can be a couple of days or even sometimes hours. So, for me, when I first started, working with Capitalise, I was quite surprised by that, that you could get finance in place within a few hours. So I suppose the lesson there is it's never too late. But having said that, as Salome mentioned several times, it's best to plan ahead, best to think about what you might need in the future. And think about it then and not when you're desperate at the last minute, as with many things in life. I think that's probably everything for today, but thank you very much for joining, and thanks again to Salome. If you do have any questions about any of this, feel free to get in contact with me or with your normal contact at FFT. We will be sharing the slides afterwards, so you'll get another chance to look over, and that will go out to anyone who didn't manage to join as well. But again, thank you very much for joining us, and yeah, have a great day, and we hope to speak to you soon.